Ladies and gentlemen, welcome back to Apex Investor. This is your news update. We're going to start with Clover Health news. As I mentioned in the stocks review, if you watched that video, Clover Health was shorted all the way down to below $2 per share. This stock is incredibly shorted. If you look at their Q4 results that they reported last Wednesday, their revenue was up $432 million, and that's up 160% year over year. I don't know how they measure this metric, how lives increased. I'm not sure how they calculate that, but anyhow, 2022 revenue, the total revenue is expected to exceed $3 billion. $3 billion, driven by 90% year over year growth in lives under management. Okay, so I suppose they're a insurance company. I'm not sure. They're trying to improve health outcomes for America's seniors. Okay, that's a very honorable mission objective. So they reported their results, and I'm just going to try to sum it up here in a nutshell for you. They're focused on creating, okay, I don't really know much about them. Might as well just read the full totality of it. Okay, they're helping doctors to provide healthcare to all, especially in underserved communities. That's one of their objectives, and they are expecting significant growth in revenue and lives under management, while at the same time we believe we are driving. Okay, I'm not going to mention that. We are singularly focused on creating great, sustainable healthcare and have centered our strategy on building and deploying physician enablement software that we believe will enable every doctor to deliver data-driven, value-based care. In 2021, physicians responded to nearly 1 million Clover Assistant suggestions. So is Clover Assistant, is that like e-health? Not sure. They drove an improvement of more than 1,000 basis points. It seems to be a metric that they need to, I'm not even sure how they measure that. So dollars and millions, Q4. Let's look at the revenue, $672 million. That's last year. This year, $1.4 billion. So yeah, this is a good company. Glad to be in it. Glad to be a shareholder. Okay. Net loss shown for full year, 17.8 million lower. Okay, I don't think they're in debt. I'm not sure though. Okay, here's the highlights. Lives under Clover Assistant management grew 223% to 96,000. Okay, again, I don't know how they measure these metrics, but overall it's looking really positive despite the market crash. This is a stealth market crash. Maybe not a stealth one, but more of a it's like a hidden market crash. I'll call it like an apocryphal market crash. It's hidden because the Dow Jones is not reflecting the price of every other stock that people are actually buying, like GameStop, AMC, etc., Clover Health, Wish, etc., Metamaterials. Okay, so I think that's all for this. Yeah, this update there for that tab. We're going to look next at Metamaterials schedules Q4 and financial year 2021 results webcast. Okay, that's looking to be a very exciting development there. So that's going to be Tuesday, March the 1st. That's tomorrow. So their Q4 is tomorrow. They announced they will report Q4 results Tuesday after the market close. So tomorrow after market close, we'll definitely have a video. That's the plan, at least. followed by a webcast on Wednesday. So they're going to have a webcast during market hours on Wednesday as well. To enhance engagement with the company's shareholder base, they're Meta is partnering with Say Technologies to allow retail and institutional shareholders to submit and upvote questions. Reminds me of Reddit somewhat. They will be answered by Meta management. I think we're going to hear a lot of questions about the dividend. Just a guess. So what question would I ask? I really don't know what I would say. I mean, I trust this company. Obviously, a lot of people would ask about the dividend, but I'll just brainstorm some questions and maybe, I don't know if I'll submit any, but I mean, I trust where they're going with this company. So that's tomorrow. Expect some pretty big news tomorrow and on Wednesday. They're going to report not only their Q4 and FY 2021, but also have a webcast answering questions from shareholders. Okay, let me just remove this. That's kind of annoying me, that OBS. Okay, welcome back. We have some good news. Leszek Kowalski, the man who used to do a blog, a free blog, finally kind of took down a bit of a paywall regarding his metamaterials coverage. And the last post he made was many months ago now, but he just did a post recently this month talking about metamaterials and his plans for that. He has a newsletter, Creating the Future. I think it's also a podcast, apparently. He's going to continue to post metamaterials content here. So I'm going to look at his article in part 2. It's in part 2 of 2. Let's read this. This is the final post within the Meta post-merger newsletter series. Access to the second newsletter and new podcast episode is available to listen to after clicking the link. The content within this newsletter post is being officially transitioned to a new format called Metamaterials After Hours, which is part of a larger format change. To anyone who clicked yes to the following question. Okay. So let's begin. I'm trying something new with sharing insights and research on metamaterial as it goes through the post-merger. So let's get housekeeping out of the way. I was a Torchlight shareholder prior to the merger and continue to be a metamaterials shareholder post-merger. June 29, I posted the following. It doesn't change the fact Torchlight holders who held out to qualify for the dividend took a serious hit in their portfolio holdings because of the requirement to hold Torchlight shares before the ex-dividend date and then right up to June 24th to qualify for the dividend. He's right. But the fact the short attack started June 22nd didn't let up. Actually, didn't let up even to this day. It is a very high price to pay. I agree with him. It is. It's going to sting even more if you held Torchlight shares when it was just pennies. In my opinion, what has been happening with the share price post-merger and the introduction of MMTLP as a tradable over-the-counter vehicle adds new trading dynamics. Let's go down memory lane for one moment. So it says here, the Series A preferred stock will not be listed or traded on any exchange and will not be registered, will not be freely transferable unless such shares are thereafter registered or are saleable pursuant to an applicable exemption from registration. The Series A preferred stock to be issued by the company to holders of record will not be listed or traded on any exchange. No market is expected to develop for the Series A preferred stock in the foreseeable future, and holders of the preferred stock may not be able to find a buyer and sell their shares if they desire to do so. Well, we seem to have a breach of that because The shorts have they found a way, they found a way to circumvent that with the MMTLP. Additionally, the Series A preferred stock that was issued to holders of record will not be registered under the Securities Act. Holders of Series A preferred stock may not be able to sell, liquidate, or transfer such unless such shares are registered with the SEC, which we do not expect will happen. Form 8K was submitted by Metamaterials, recorded by the SEC July 2nd. In my opinion, with respect to the dividend, all measures must be taken to protect Series A preferred dividend shareholders that held at the time of the ex-dividend date. If that means realigning the original Series A preferred dividend shares into a new separate corporate entity to protect shareholder dividend profits against new trading dynamics without adding additional unmitigated risks to the equation, and provide an unencumbered path for senior management to execute their vision without external interference, then I would be open to it for my preferred shares, with returns being disbursed as cash, perpetuity, security preferentially, and with an option to purchase additional Meta shares at a special rate. In my opinion, the current OTC vehicle that focuses on trading Series A preferred dividend shares, that's MMTLP, may potentially resemble more of a derivative product, whereby the rights to the Series A shares are being traded with a potential built-in exit strategy. Incubators of uncertainty and volatility will try to circumvent compliance requirements. With respect to the share price post-merger, let me provide some context from a post I made July 14. Torchlight, Meta, is this a joke? They can't even keep the proper industry and sector data. Okay. The price was $3.97 when that was posted in July. When the goalposts continue to be moved, it is difficult to score a goal, regardless of how good the team is. In my opinion, the public shell must be protected at all costs and remain the vehicle so that short-term, mid-term, and long-term visions can be manifested. July 7th, he wrote the following. Metamaterials will fundamentally help improve human life. It has the true potential in becoming part of a new class of infrastructure using sustainable materials. It's like compare it to energy sector, oil sector, and so on. In my opinion, I take the current value and long-term value of my investments very seriously. Efforts must be taken to protect that value. So he doesn't seem too happy about MMTLP. It needs to stay above 285. That's what he said on December 6th. The reason why I wrote this was critical for Meta to stay above 285 because the next support was 185. And yeah, we went below there. It crossed below 185 on January 21st, February 1st. It crossed above 185. With respect to this topic thread, it will be expanded upon and available as a new post within the second newsletter. When I started in business, I was introduced to a retired judge. He met with me for almost a year, provided insights. One of these insights had to do with public companies. Here's one thing he told me. The magic number for control of the public float is 20%, so control of the company. The higher the number of shares you hold above 20% of the public float, the less chance you will be exposed to having your vision derailed. If you hold less than 20% of a public float, there is a risk of a hostile takeover. This can occur when other investors who hold shares within 20% come together as a group and forcefully take control of the float. If this were to happen, the vision would more than likely be derailed, and the worst case scenario would be the company is merged with or acquisitioned by a third party. In my opinion, when senior management of a public company continue to acquire more of the public float that exceed 20%, it helps to protect their vision from being derailed and creates a form of vision execution stability. With respect to this topic thread, it will be expanded upon and available as a new post. Second newsletter. Okay, here we go. My original newsletter would not exist, nor would it evolve into the new format if it was not for the individuals within the meta community. You're welcome. It was important for me to evolve the direction and format into areas that I thought were of additional importance. November 5th, he posted the following. There's a reason why I have delayed posting my final newsletter post. And starting up the second newsletter, I will explain soon. I think you may like the reason. The first public post I made was June 28th. The final public post I made was August 30th. An update was made September 7th. There are two reasons why no additional public posts were made. I came across the use of one of my public posts in a way that it was not intended for, and I wanted to incorporate content from research I've been working on that I thought was very relevant. For example, one of the areas I was focused on was trading algorithms, which is something I do not cover in this channel because, again, I don't trust those algorithms. The first thing I did was to create a purpose for my second newsletter. Here's what I came up with. Empowering the forward-thinking retail investor. Retail investors have been burned. Time for a new approach. The second thing I did, that's a really bad lisp. The second thing I did was to create a theme for my second newsletter, Creating the Future. Companies that are catalysts of disruption in the future, Meta falls in that category, and abstract catalysts which can impact the future of individuals on a personal level through disruptive insights, research, and strategy. I think they were that applies to Meta in both of those ways. The third thing I did was to create a formal name for my second newsletter. The name is Chaonix. Interesting. Long time ago, I registered a domain, chaonix.com. I have never used it or referenced Chaonix until today. Oh, pronounced K-Onyx. Okay, not Ka, K-Onyx. Okay, well, it should be K-Onyx, but okay. I wanted a name for my second newsletter that captured the essence of disruption. Elon and his contributions, Meta with its potential future impact, and other disruptive companies, as well as markets that do not even exist yet. This word is also representative of my long-term vision for the second newsletter. Why is this word relevant? The X within Chaonix is my nod to Elon and SpaceX. Elon created a company from nothing, the vehicle to take astronauts back to the space station. That is an accomplishment that will be noted in history. The N is a reference to the word new, which are the products created from and associated to disruption. The KO is a reference to the word chaos, which can be created within a market because of disruption or future disruption by companies. For example, metamaterials and or abstract catalysts who have disruptive insights, research, and strategy. I should add Apple there too, under Steve Jobs, that is, not as they are now. One thing I want to note, there are certain parts within the second newsletter that are purposely off-grid, meaning you can still access them but in a different way. This is by design because of the reasons he mentioned and limitations within the original newsletter format that created barriers and prevented me from adding more in-depth insights. I am initially introducing 4 new series formats that make up Creating the Future. To read the second part of this post and hear the new podcast, click the following link. Okay, so you gotta click there. Hopefully I don't get a virus. Okay, it's not there. Oh, it is here. Okay, never mind. Page not found. Okay, looks like that might be here. So, I don't know where he has this, but anyhow. So I think that's all for this segment. We're going to give it a pause. Okay, ladies and gentlemen, I think that's all for this segment. We're going to do do a third video just for metamaterials news, because apparently there wasn't too much that Leszek covered. It just seemed kind of all over the place to me. But stay tuned for our third video. We're going to have a more focused meta post video coming up for you.